The Federal Reserve slashed interest rates aggressively on Wednesday, in fact, announcing the first rate cut since March 2020. Vedant, this is big. This is first interest rate cut since COVID, something that will be beneficial for borrowers across the world and in India as well.
Well, what does it really mean for India? What does it mean for you and me? Joining me in the studio, our senior business correspondent, Sakshi, to decode all of that for us. Sakshi, it's over to you.
That's right. A milestone really for the US Fed. So the Federal Reserve, or the Central Bank of the United States, has gone big with their first interest rate cut in 4 years. The Fed has slashed the key lending rate by 50 basis points to the target range of 4.75 and 5%. Now remember, this is the first Fed rate cut since March 2020, and the Fed has kept lending rates at a 2-decade high. Policymakers were debating the quantum of the rate cut given the state of the US economy, with inflation easing and unemployment concerns still existing and persisting. Important to note here that the decision to cut rates by 50 basis points was not unanimous, as the Fed governor had called for a 25 basis point cut. However, the Fed chair has said the Fed's goal is to ensure inflation remains stable and jobless rates don't tick higher. While some experts see this as an aggressive move by the US central bank to stimulate the US economy, others believe this was the need of the hour. So for those wondering, what does the Fed's big decision mean for India? Well, experts believe cheaper borrowing could not only boost demand in the US but globally as well, could also make investors look to India for more foreign investment at large. With reduced borrowing costs, the IT sector may also see increased demand, and in India as well, cheaper financing is likely to boost rate-sensitive sectors such as infrastructure. So, of course, to decode this further, I'm joined by Abhinav Mishra, banking and capital markets expert. Thank you so much for your time. First, the big question: do you see this decision by the Fed as an aggressive move, or as an aggressive move to really stimulate the US economy at large, or the need of the hour?
Thank you, Sakshi, for inviting me. I think the whole world economies, including India, have been eyeing for these rate cuts for some time. So I think for the last couple of quarters, this has been the talk of the town, and the broader market consensus was already with an expectation of about 25 basis point cut. What came as a pleasant surprise was a much steeper 50 basis point cut. And as you rightly said, not just since COVID, over the last 2 decades, the last 2 times we have seen that 50 basis point cut is first in the financial crisis of 2008, and then in the COVID era, and now we are seeing another 50 basis point cut. Now that also dampens the future expectation in terms of the further cuts. So I think the market was expecting more around 25 basis point, and with a couple of revisions of that in the coming quarters. We now expect with this steeper cut already, the next few cuts would be a bit smaller. Now, from an economic perspective, obviously the cost of borrowing comes down, and that is a net boost in the short term. But from a capital markets perspective, I think in the long term, this is also about slowing down of the US economy. And that is where, while in the short term for banking and financial services, IT, consumer goods, it might be quite positive. In the longer run, we do foresee some stress, especially for service sector, if there is a further slowdown in the US economy.
Right, but for those wondering, what does this 50 basis point rate cut indicate for global economies and markets really at large, including India?
I think in the short term, we will see an uptick, and I think we are already seeing in markets as we speak reacting to this news. As soon as the rate cuts were coming down, a lot of global markets saw an uptick in activity, both in Dow Jones, S&P 500, as much as in Nifty. But we are seeing those effects are flattening out as people go through the full report from the Fed Reserve as well, which also talks about the global economy and the US markets, which on the positive note, do not foresee a recession at this stage, but we do foresee a slowdown. And there, the impact is kind of softening the uptick that we would have otherwise seen. But overall, in the short term, net positive for the markets.
All right. Thank you so much for sharing your thoughts. That is really as far as the big business headline is concerned, Vedant. Back to you.